Dear students, in the first two parts of our lecture regarding concept of bank customer, we have understood that what is a customer. A customer is someone or an entity that can create demand, and we have understood that someone that creates demand initially becomes a prospective customer, and then when that prospective customer purchases a product or a service, then that prospect or the prospective customer becomes customer of that product or that service. Then we have understood that there is no clear cut or a comprehensive definition of customer in relation to banking system. However, many thinkers have tried to explain the concept of bank customer, and in that discussion we have also come to know that Sir John Paget gave us an idea regarding how we can describe or explain a bank customer. And in the same line, we are also trying to give a explanation of what a bank customer is, and we have seen that there are mainly three conditions, and if these three conditions are fulfilled, then we can say that that person or that entity is a bank customer. And the first condition was that anyone, if he or she, or if any entity is to be called a bank customer, then that entity, that person will have to have an account with the bank. The account may vary, of course. It can be a savings account, it can be a current account, or it can be any other deposit account. Now we shall try to see the last two concepts. And the second concept is that the relationship of banker and customer begins as soon as money or check is paid in the bank, and the bank accepts it and is prepared to open the account. So therefore, for to become a customer, a person will have to deposit an amount with the bank, and that amount can be deposited either in the form of cash or in the form of check. The bank will have to accept that cash, the bank will have to accept that cash or check, and when the bank accepts that and the bank becomes ready to open the account and opens the account, then that particular person or the account holder becomes the customer of the bank. And the third condition is that the word customer signifies a relationship in which duration is not of essence. In the modern view of explaining bank customer, the concept of duration theory is discarded, and the view of Sir John Paget was explored by Mr. Justice Belhatchy, who in the course of judgment of a case observed that the relation of banker and the customer begins as soon as the first check is paid in the and accepted for collection, and not merely when it is paid. So therefore, the word customer signifies a relationship in which duration is not of essence. A person whose money has been accepted by the banker on the footing that he undertakes to honor checks unto the amount standing to his credit is a customer of the bank, irrespective of whether his connection is of short or long duration. So therefore, we have understood what is a bank customer, and in simple terms, we can say that there are three important conditions, and if these three important conditions are fulfilled, then we can say that that particular person or that entity is a bank customer. Thank you.